Hey everyone, and welcome back to the Tesla Stock Podcast. Well, the earnings are out, and despite delivering a record number of cars, Tesla's results were frankly disappointing, with profits plunging. But the real story wasn't the numbers. It was Elon Musk spending the end of the call pleading for his trillion-dollar pay package and blasting anyone who dares to question it. This comes just as a major report highlights the deep stagnation in Tesla's product lineup. With the stock now trading around the $442 mark after the earnings drop, we have a lot to unpack. Let's start with the third-quarter earnings report itself. On the surface, the headline delivery number of 497,000 cars was a massive beat, easily surpassing expectations. However, digging into the financials reveals a much uglier picture. Profit missed analyst estimates significantly. Operating income plunged a staggering 40% compared to last year. Why? Costs are soaring. Operating expenses jumped 50%, and the company specifically called out a $400 million hit from tariffs in the quarter alone. This confirms the fears that the record delivery number was achieved through heavy discounting and inventory clearing ahead of the tax credit expiration, sacrificing profitability for volume. The underlying health of the core business looks shaky. But instead of addressing these challenges head-on during the earnings call, Elon Musk took a sharp detour. As the call was wrapping up, he launched into an extended plea for shareholders to approve his new, potentially trillion-dollar compensation package. He attacked the major independent proxy advisory firms, ISS and Glass Lewis, who have both recommended voting against the plan, saying they have no freaking clue. He framed the issue not as being about the money, but about needing sufficient voting control, at least 25%, to ensure safety as Tesla builds a robot army. He essentially threatened shareholders, implying he needs this control to stay comfortable leading Tesla's AI and robotics future. The CFO then chimed in, praising the plan and urging shareholders multiple times to vote yes. It was an extraordinary end to an earnings call, shifting the focus entirely away from the weak financial results and onto the CEO's personal demands. This lack of focus on the core auto business is becoming a major theme, and it brings us directly to our second story, a deep-dive analysis from Reuters that lays bare the stark reality of Tesla's product pipeline, or rather, the lack thereof. The report argues that years after the groundbreaking launch of the Model 3 and Model Y, Tesla's stalling car business remains almost entirely dependent on that single, aging platform. The Cybertruck, its only new model since 2020, has clearly flopped commercially. The promised $25,000 affordable car was canceled. The new Roadster, unveiled as a prototype back in 2017, is still nowhere to be seen. And Musk has promised no other new or redesigned human-driven vehicles. The analysis highlights how Tesla is defying the fundamental laws of the auto industry, where sales inevitably fall as models age and competitors launch fresher products. While traditional automakers overhaul models every 8 years or less, and Chinese rivals are now doing it in 2 years, Tesla seems content to treat its cars like iPhones, relying on incremental software updates. But the data shows this strategy is failing. Tesla's customer loyalty plunged last year, only recovering after heavy incentives were introduced. Its global sales are declining even as the EV market grows. The report concludes that Tesla's apparent neglect of its core car business, while Musk focuses on robotaxis and robots, poses a major risk to investors. It perfectly captures the growing concern that the company has taken its eye off the ball. And just to add another layer of concern right after earnings, our final story is a new recall affecting some of Tesla's newest vehicles. The company is recalling nearly 13,000 cars in the U.S., specifically certain 2025 Model 3s and 2026 Model Ys. According to NHTSA, the recall is due to a defect in a battery pack component, specifically a faulty contactor solenoid, that could potentially open while driving, causing a sudden loss of propulsion power. Tesla says it has identified 36 warranty claims related to this issue, but is unaware of any collisions or injuries. They will replace the faulty component free of charge. Now, while this recall isn't massive in scale, its timing is certainly not ideal, coming right after a disappointing earnings report and just weeks after NHTSA opened a massive investigation into the safety of full self-driving. It raises questions about quality control, particularly on these newer model year vehicles, and adds to the narrative of increasing regulatory scrutiny. It's another small crack in the armor at a time when the company needs to project strength and flawless execution to justify its AI-driven valuation. So, to sum it all up, Tesla's third-quarter earnings showed record deliveries, but a sharp plunge in profitability, revealing underlying cost pressures and margin erosion. Instead of focusing on fixing the core business, the earnings call ended with Elon Musk pleading for his trillion-dollar pay package and attacking critics, framing it as necessary for his control over the company's AI future. A major analysis highlights the stark reality that Tesla's core product line is stagnating, with no new human-driven vehicles in the pipeline while competitors race ahead. And adding to the operational concerns, a new recall has been issued for newer Model 3 and Y vehicles due to a battery component defect that could cause a loss of power. This brings me to my question for you, especially after that earnings call. What matters more to you right now? Elon Musk's grand vision for AI, robots, and a trillion-dollar payday, or the fundamental health and profitability of the car business that actually generates revenue today? Has the focus shifted too far into the future, leaving the present vulnerable? Let me know where you think the priority should be in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.